Russia moves to fourth place in gold and foreign exchange reserves. The global economy is constantly changing. Many countries make up their wealth by accumulating hard assets such as gold and other commodities. This is why Russia has taken a special interest in gold as a valuable store of wealth in light of the sanctions placed on them by Western powers. They've opted to use gold to protect their economic interests. In doing so, Russia has progressed significantly in the past 5 years. Based on data from various central banks, Russia is now ranked fourth among countries with the largest gold and foreign stock reserves amounting to $582 billion. And now, analysts believe that Russia's new economic strategy is based on its reserves and gold. Hi! Allow me to welcome you to another video of Finance Sense. We cover all the latest trends in the financial markets and the economy. Make sure to leave a like, subscribe if you're new to our channel, and turn on the notification bell to keep posted. With that being said, let's start. Russia currently has $582 billion in gold and foreign exchange reserves, putting it in the top 4 countries worldwide. According to the statistics provided by several central banks, this list places China, Japan, Switzerland, and India among the top 5 countries. The 6th largest reserve holder last year was Saudi Arabia, which moved ahead of Hong Kong and South Korea. Additionally, with Brazil and Germany ahead of Singapore, Singapore has fallen out of the top 10 countries with the greatest reserves. Moreover, after falling to 5th place at first, Russia managed to work its way back to 4th place toward the end of the year. Also, Sweden replaced the Netherlands in the top 30 for the very first time. Meanwhile, almost half of Russia's gold reserves were frozen in Western nations in 2022, costing the country $300 billion. After that, Russia restricted foreign assets held by nations it deemed hostile. The economic assets of Russia were frozen as part of the Western sanctions, with the intention of bringing about a decline in the ruble's value. Because of this, foreign exchange market stabilization operations using the frozen assets were rendered impossible. The Chinese RMB yuan and gold were the only foreign currencies still in circulation in Russia. Also, although Russia's current account surplus in 2022 was a record high, the central bank did not replenish its foreign exchange reserves. As a matter of fact, revaluing Russian assets in US dollars was the driving force behind the country's economic revival. Furthermore, Russia has made modifications to the structure of its national budget. In 2023, the Russian government introduced a brand new budget and guidelines. Likewise, if oil and gas exports bring in more money than expected, the Russian central bank will refill its reserves with the Chinese yuan. Conversely, the RMB currency reserves will be utilized to make up for the decline in oil and gas earnings. According to Yulia Makarenko of the Russian Bank Development Institute, Russia has continued to hold one of the highest gold reserves. This is due to the central bank's wise judgment in making decisions in 2022 amid challenging circumstances. Specific actions, such as altering the critical rate and creating restrictions for trading proceeds for exporters, were met with controversy, but in the end, they were shown to be the appropriate ones. However, because Russia has lost control of around half of its assets, it is unclear whether or not it will ever regain control of those assets. And for Russia to prepare for all of this, it reduced the value of its frozen reserves in 2022. On the other hand, China's #1 ranking reflects the size of the country's GDP. For the past 17 consecutive years, China has been the world's largest gold and foreign exchange reserves holder. Furthermore, China's lead is more than twice as large as its nearest competitors. This indicates that China's reserve assets will remain unsurpassed in the near future by any other nation's holdings. Interestingly, the United States does not place among the top 10 nations in terms of the amount of money spent on research and development, since the country has a relatively small budget of $37.2 billion. In this regard, other countries like Brazil, Mexico, and Israel are in the lead. This may provide a challenge for the United States of America, which primarily depends on borrowing money rather than investing in tangible assets. The United States' current debt of $31.4 trillion has officially reached the country's maximum legal limit. Now, negotiations are taking place to propose increasing this amount even more, but terrible repercussions will likely occur if this issue is not remedied. The quantity of gold reserves a nation possesses is a good indicator of the health of its economy. Nonetheless, the United States owes more than $30 trillion in public debt, which clearly indicates a severe imbalance. The United States did not have a strong financial cushion to fall back on when it was hit by the global economic shocks of 2020, both in terms of its reserves and actual money supply. This suggests that it may not be as resilient as it initially appears when subjected to new economic challenges. Meanwhile, the United States is contemplating the imposition of more asset freezes against Russia to help Ukraine. On the other hand, moving the holdings of a foreign central bank to a third nation has never been done before. Also, other nations may move their assets out of American security and protection if the US expropriates Russia's assets to support its debt. Other countries worry that their assets will face the same treatment, which might result in heavy penalties. During its history, Russia has always been able to maintain massive global reserves. This means it can keep its currency value stable and fulfill domestic demand without selling it regularly. This is due to Russia's large exports and relatively low imports. In addition, because a huge portion of Russia's overseas reserves is now unavailable in the nations that comprise the G7, these reserves cannot be used in the event of unexpected emergencies. Hence, expanding their reserves will help them to be able to obtain money quickly in such circumstances. To deal with potential budget deficits, the Russian Ministry of Finance will also concentrate on amassing domestic ruble debt. According to Alexander Abramov of RUNEPA, a country should not rely only on gold as a monetary reserve in order to solve its economic problems. He claims that a nation's capacity to maintain economic stability may be improved by amassing gold reserves, since this creates a liquid asset that can be traded with other countries for support in times of crisis. That might not, however, be the greatest investment choice. Gold's value may fluctuate, rising during bull markets and declining during bear markets, which might lower its worth as an investment. As a result, Abramov advises that nations look into other investment opportunities to guarantee their long-term financial security. In 2023, the world economy is expected to grow, which would lead to a drop in the price of gold. As a result, it is probable that the value of other investments, such as stocks and government securities, would rise more quickly. Russia is expected to steadily raise its holdings of other crucial currencies in order to maintain a balance in retaining reserves. At the same time, further restrictions aimed at Russia's gold holdings are included in the 2023 National Defense Authorization Bill. The measure incorporates language from a bipartisan bill filed in March to make it more difficult for Russian President Vladimir Putin to utilize gold to strengthen the ruble. If the defense measure is approved, it would directly penalize U.S. entities that willfully deal in or transfer gold from Russia's central bank assets. Also, individuals who sell gold in Russia, whether physically or digitally, will face sanctions. According to Senator Angus King, among the few resources that Putin can exploit to finance his aggressive expansionism is Russia's vast gold reserves. King co-sponsored a bill in March that calls for sanctioning these reserves to cut off Russia from the global economy and make it much more challenging for Putin to carry out his expensive military war. In addition, Russia had amassed a large quantity of gold in the years before it invaded Ukraine. According to the Central Bank of Russia, as of mid-2021, the Central Bank of Russia has gold valued at $127 billion. Despite the fact that a number of the bill's features are still up for discussion and negotiation, lawmakers are working tirelessly to approve a major military policy bill before the next Congress is ushered in. The measure would strengthen already ongoing operations by requiring the U.S. Treasury to look into people involved in transactions concerning Russian gold. Senator King claimed in a statement that the measure is a powerful means of retaliating against Putin's actions and tightening financial sanctions. In the past, Western countries have tried to limit Russia's ability to pay for military activities in Ukraine by restricting its gold exports. The United States and other members of the G7 have recently banned gold imports from Russia, the country's second most valued commodity after energy. The West has also set a price cap on Russian oil to decrease Russian oil income without impacting global oil supplies. Hi! It looks like you've reached the end of this video. Thank you for watching this far. Please subscribe and give a like if you enjoyed it, and comment your thoughts in the comment section below. This is Finance Sense, helping you keep up with all the latest trends in the financial markets and the economy. See you around!